So now I'm going back live again after a long time. We've been right, we've been correct, but we have to get humble with the market now. The computer has been crazy these days, and I promise I'm going to reveal you all the information I have waiting. I have been warning about the deleverage in the crypto market. Look who is here in the Bloomberg homepage. Is Michael Burry, the guru, the silver short guru, and he was calling for the mother of all crashes. And of course, he was right, and we were being warning in our channel that they were going to stop Bitcoin, and we warned about the last high. If you check here in this video, we were warning even with the crazy silver slayer fever. All the people in the precious metal markets crying because the Federal Reserve destroyed. And I'm very active on Twitter lately, but the Federal Reserve destroyed the inflation expectations with the reverse repo operations. This is the same thing that Argentina did. Not exactly the same thing, but the central bank was taking money from the system. What happened with the Federal Reserve? They entered in panic. The Federal Reserve entered in panic with the Biden presidency, and they started when if you review and remember, first you had Biden presidency going up, then Biden announcing spending, then Biden announcing more spending, and after that the Federal Reserve started to make crazy reverse repo ops. So let's go back now to some of the information I have to tell you now. They are coming for the cryptocurrency market because they want that money, and they want to take and remove the privacy in the system to control it, because privacy will allow, the destruction of privacy will allow for a more stable financial system. So they want CBDCs, and they want the trillions in the market cap. When I'm talking about them, I'm talking about the regulators. I will show you all the regulations that are getting ready to destroy the crypto market. And if you believe with laser eyes on Twitter putting your mouth where you're putting your money where your mouth is, you're going to save the cryptocurrency market, well, that is not enough. And even though the El Salvador picked up Bitcoin as a legal tender currency, it seems that that action is not really helping the cryptocurrency market. So much more will be needed from the Bitcoin camp to protect their dream, If they want to protect their dream, they have to make much more than lazy eyes on Twitter. And let's check what happened now with very useful. We check the media now. I always check what they say, what they are doing. If you see, all is the Federal Reserve. Another website I use to check precious metal market is Goldseek in Peter Spina there, and gold heads for the worst week in 9 months. What's the main challenge for silver now? It's the level 24. I believe if silver holds that level, it will be okay for the rest of the year. I don't know, but I believe silver will be much higher between next year and the year after that. So they are talking about the bloodbath in the mining sector. Yes, the Federal Reserve is in panic, and they have a strong hand in the short term. If you check Bitcoin now, if you go to coin market cap, Bitcoin is still holding but Ethereum weekly charts are horrendous. I was worrying about that. I was worrying about Ethereum. I have a demo account here. I have Ethereum here. Let me check here. It's really horrendous. One of the things that made me very interested in Ethereum is that American board, which is a very important American exchange, was developing a project with Ethereum as a backbone for the software interest rates. That means the replacement of the labor markets in the USA, the software. Well, we call it software in Argentina. And if you check the weekly chart of Ethereum, it's really nasty. This is really nasty, and I don't have hope for Ethereum in the short term. It looks very weak chart. Let's see what happens with the daily chart now. Excuse me. I've been calling for it. It's still in a bearish momentum. Michael Berry is calling for a mother crash. I don't know what's going to happen, but I do know that crypto markets are weak now, and you have to wait for that. But the real thing is that the Federal Reserve is spending, the US is spending a lot of money, and they're using the Federal Reserve to keep the game. But not only the Federal Reserve was active in the market stopping inflation, China was also selling the stockpiles, and also the Macron call. Macron call came a few days before the market crash, the gold market crash. So you have very political interest in stability in the short term of inflation expectations. But the truth is that this game can be controlled only in the short term. The truth is that the spending will be there in the United States. If you see that we have a great rebound, or everybody is happy with the strength in the US economy, something is going on with the real estate prices levels. The real estate prices market is discounting an increase in interest rates, and maybe they are talking about that the value of the US dollar is going down, so they are securing the longest financing that is only available in the mortgage financing sector. So they are using the real estate market as a hedge for long-term protection from inflation. This is what is doing all the smart investment funds, or whoever is buying real estate in the United States. They are using the longest loans to secure financing very low and get tangible real assets and make it really killing against inflation. So you have it 2, 3, 4% interest rates, and you can get a fixed loan. That was one of my greatest hedge against inflation. Buying a house in Argentina with a 7% fixed interest rate loan in local currency, in peso, was the way I made a killing. It was one of the greatest success and the greatest hedge against inflation, is buying an asset from a fixed rate and get a tangible asset and bet against your currency. What will happen with precious metals? Precious metals are not really protecting you against inflation. Not real protection. Silver is below zero now. Silver is below zero, minus 2%. year-to-date relative performance. So all those crazy guys who will tell you that silver will protect you against inflation, well, hello, McFly, you have a -2% return in on this year. But we were warning about incoming increase in lumber. It was way much higher, and we warned about lumber explosion. In November it was one of the first videos. And what is really protecting you from inflation is food prices. Maybe it's geopolitical pressure in the food prices. Soybeans really low, 6%. What I do with rice, -1%. What I believe that food should be a nice hedge for the coming years. And this is the first year. Now we have all the commodities in the defense reaction. If you want to go back to Bitcoin, because so far Bitcoin is holding that level, and I'm going to move to the weekly charts. We tell you that Bitcoin is giving you very strong and dangerous patterns of impressive volatility ahead. So these weeks are very dangerous, and getting even more dangerous for Bitcoin. If I go back to Ethereum, the formation is more bearish than what Bitcoin is hinting now. Bitcoin is a bit more neutral, but the formation is very dangerous here. This is a very dangerous formation. Bitcoin is out of the bubble movement and moving sideways for weeks. Ethereum is giving 2 consecutive weeks going down, and someone sold big Ethereum all the way down to 100 or 1400. So they so big and they pushing the market down again. So cryptocurrencies are also in nasty, and always the raw rates here in this exchange are negative, so you not get paid for going short either. So I'm not shorting happily. The thing with gold, the price of gold, if you check Theta gold here chart, gold is out of the mood. Gold is out of the mood, and let's check this chart now. I'm going to week daily. It's a mess. If you are following crypto gold trading, you will get removed from the market. It's almost like they love to steal money from stupid traders, because they create these needles when there is low volume, and they take out your position. So be careful. You want to play with crypto gold, because they take money from little guys from time to time. They will use these needles, and they will take down your short positions, or they will take down your long positions way before the movement. So you could use these needles to predict. Check here. You could predict trading signals with their needles, because they use them to remove the small guys, and they take down your positions there. Yes, you see a big needle here. They take down. If you are short, they take you out. If you are long, they take you out. So crypto gold trading is very dangerous because you have a lack of liquidity in some time. Be careful if you love trading with cryptocurrencies. And I use this as demo account and to spy on the crypto market, and it's very essential to buy or sell crypto gold with, because the level of liquidity is too low. And we're going to talk one day more about the coming regulations in the CBDC sector. Central banks are now discussing climate change risks and climate change taxes and climate change liquidity requirements for the banks. This is going to add more pressure on the level of reserves in some banks. This is only a theoretical discussion. It's still very new. It's being popped out by the Bank of France and Basel technical people, the technicians there, are creating the regulations for more climate change risk frameworks, and that means in English that they may try to assess the risks of imposing global taxes on for green policies, and how that could impact international companies, banks, and the financial system. This is a very important risk because we add more pressure in the system. And the most important thing you should know is they are coming for the cryptocurrency market with taxation, with global taxes. If you see that they are talking about global taxes, that means they are going to attack asset classes later when inflations start to get out of control. So maybe a G7 tax action coordinated against an asset class like Bitcoin could be on the horizon, maybe, because I see that they are talking about global taxes. Global taxes means they are getting ready to take down the competence. Competence is gold, competence is Bitcoin, competence is everything that is not from the financial sector, like US dollars, euros, or the CBDCs. So if you keep watching about global taxes, get ready because they are coming for you. All of those who are in the Bitcoin market, they are coming for you with global taxes. It's really a way to scare people is taxation. The second way is asking for the investor list. The third way is money laundering policies. 4 is competition, and much more strategies that could accelerate the pressure on the market. In this context, I believe you have to wait and see what will happen. There is a lot of rumors about COVID. People keep talking about COVID, so I'm going to talk to you about the most crazy thing I have seen checking the charts. So if I check, this country has 1.3 billion population. 1.3. You check the chart here, and daily new case almost disappear from May, and FT case completely destroyed in India. So if you check, this is like a 80% crash. In India, it's just 1 month. This is not herd immunity, and I don't know what's going on in India, but they did something in May and COVID disappeared quickly, very quickly, and I think it's not vaccinations. I can talk about COVID here. I'm talking about only the charts, and this is extremely violent and still bearish. If I could simplify that, it's still bearish. but I don't know what caused that. And if you check the amount of vaccination level in India, if you check India in the other chat, India, you check the vaccination by country, the other website, World of the data, World of all world in data, all world in data. This is all world in data. I'm going to check India. India, come on, all world in data is the best website to check the amount of people. India, where are you? Here. If you see, India is even lower than Argentina. 15% population. Wow, 50% is a lot of people. 50% population got vaccinated. Let me check relative to population. People vaccinated, cumulative. Yes, I think we have the right chart. People vaccinated by doses, people vaccinated. This could be relative to population. Wow, a lot of people in India. 50% is a lot. What happened to Argentina should be around 30%. Let me check if this chart is correct. I'm saying things right. Yes, it's correct. So you have 50% of 1.3 billion people in India, and they crash COVID numbers, 80%, like 8% in only 1 month. And Argentina is not crashing their numbers, so India is doing something different with half of the vaccination levels. Something is wrong with India, or something is wrong with the rest of the countries. So I'm talking about statistics. I love charts and have been following COVID charts, so find out what is happening, what is happening in India, what have they done with the COVID chart, because I don't know what have they done. They have crashed COVID in May. So very crazy statistics from COVID, very crazy waves. They're talking about Delta a lot, but what happened with India is key to understand if we have this info with COVID statistics or not. It's key to understand India chart, and nobody's talking about the crash of India cases with no real good explanation. And no, it's not vaccination levels. I don't think so. Argentina keeps its wave with double vaccination levels, and the wave is not moving the way India is moving, and there are not many examples. So from technical analysis, something is wrong with the world and something is wrong with India. I don't know what is. I think I should ask. Maybe they are doing different protocols. I don't know what's going on. Michael Berry was quick, very. So you want money, Bloomberg as usual. Berry was correct that he was short in Tesla. He was talking about inflation is coming. He's deleting. This is the most important part of the article. Michael Berry, famous guy in the Big Short movie, warning individual investors about losses the size of countries, even in the crypto and meme stocks. All hype is drawing in retail before the mother of all crashes. The money, and I love this part. This is the part I was trying to show you. When crypto falls from trillions, mainstream losses will approach the size of country. In history ain't change. He's talking about a bubble, and he's talking about the bubble in the cryptocurrency market. Yes. If you check the size of the bubble, if you check the market cap here, the real bubble, is the death bubble. But this is a bubble that will be protected from political reasons because it's the lifetime. Bitcoin is a bubble, if you want, of almost 60% of $1 trillion. Maybe you could say, hey, but what about the US dollar? Well, maybe we could say that the bond market is a 50 times bigger bubble, and they will protect the other bubble, the bond market bubble, not this one. So the Bitcoin is a very important competence, and they will try to keep it down. And maybe Ethereum is giving us a signal that it's going down. I'm not saying that much more to say, but we are here in watch mode now. I believe that silver was showing strength, and silver should hold the 24 level. This is the key level, 24. If they crash there, silver is down, way down to 18 non-stop for me. If silver protects the 24 level, $24 per ounce, it's okay, because we always check the silver seasonal charts. You have corrections in silver between February and June, and then you have July, slowly volatility goes down, and you have later July, August, and September, very strong month for gold. The best month is September for gold, and you have a good season there. So silver has 1 month to protect 24, only 4 weeks. 4 weeks from the seasonal charts. So the silver has to protect in the next 2 or 4 months the 24 level. If they protect that, silver could keep going up, and we could see a 32 assault next year easily for silver. This is my belief, that if silver protects the 24 level next year, silver will attack the 30 level, which is the high of this year, and it will try to go above 33, 35, and not much than that. If it keeps going up, I will be surprised. I don't see silver or gold as the main protectors from inflation, as inflation hedge. I think I can see your question, Algo. Let me check 1 second. Let me check gold. I think gold is under extreme pressure. Gold is now weak, and we don't see really good opportunity for this year. So we follow silver. If you want to know what is going to happen with gold, follow silver. Silver has to protect the 24 level in the next 3 weeks. Silver is much more clear chart for me now. I'm long silver for the long term, but I don't believe that silver will be a hedge against inflation. When I get a real hedge, I'm from Argentina, I will promise you that this will be their master hedge. You get a real tangible asset that will adjust itself against inflation and secure long-term interest rates, fixed rates, loans, and bet against your paper currency. That's the best thing Argentina did in the last 20 years. And this is the thing that is being done because the real estate market in the United States is pretty hot, because investment funds were taking down and taking all the Basel III. Good question. Basel III regulations will protect the stability in the system and inflation expectations. Basel III could be changed. Basel III regulations are not be, maybe they will be different time, maybe will be moved in time, because Basel III and gold is treated in a way that the way that the London bullion market has made a protest against Basel, demanding that that could destroy the liquidity in the gold market. So one of the things that Basel III regulations is quite a concern in the gold market, and is being you could listen, if you want to protect the gold market, you could always change the rules, or maybe you could create other instruments or regulations to bring back liquidity to the gold market and protect the levels of liquidity in multiple markets. So Basel III is a rule that is protecting the NSFR, which is a net stable fund ratio, and the changes in the gold rules for that NSFR ratio only applies to banks in compliance with Basel III regulations. So the stability in the gold market is quite a concern, but it's being promoted and it's being backed up by the famous analysts like Alistair McLeod was talking about that, the British famous analyst from the UK. You could also get a very simple way to take down the pressure on gold, even with Basel III, which is massive selling of gold reserves. You have thousands of gold reserves, physical gold reserve, that could be dumped, or maybe paper positions, as people like to say. All the algo traders and all the rest of the market will follow the signals of the taper fears and the inflation expectation being moderated. So the Federal Reserve has quite tools. The most important thing is, can you answer me what is the amount of leverage in the cryptocurrency market? Nobody knows for sure what is the amount of leverage in the cryptocurrency market. I believe it's around at least 100 billion US dollars. This is my number. At least 100 billion US dollars in leverage, and maybe much more. That's why I was worrying. I was worried about the high Bitcoin, 57k, and I went back because all these instruments will be very active intervention from now. And you saw that Argentina closed the beef exports, Argentina closed corn exports, and they got a protest from Israel from the big exports being closed, threatening Argentina, and the Federal Reserve entered in panic with COVID crisis and now with Biden spending, and things are going to stay volatile for a while. But Basel III was promoted as the new way to keep you selling gold, as gold crash anyway. Gold crash anyway. And if you create enough paper, you could comply with Basel III regulations and much lower gold prices. Yes, only you need to do is print more gold paper and you will comply easily with Basel III regulations. If you remove the physical demand and create more artificial gold supply, Basel III regulations could be something that you could establish and apply and protect the levels of liquidity if you remove the pressure of the physical market. That's only That's the only thing needed, is removing and scaring market, the physical market, and that's it. You have to remove the pressure from the physical market, and they're doing this with creating new inflation expectations that will be short term. If you study what they are doing, they will be attacking multiple markets as needed to protect the system. Um, I believe that we have to wait to see where they are going to stop this. Silver 24, Bitcoin 28, 30k level is key for Bitcoin. The area of, if Bitcoin crosses below 30k, it's dead forever. I will touch cryptocurrency. If Bitcoin can't protect the 30k level, from now all the commodity sectors are in pressure. All the crypto will continue to be in pressure. The most nasty chart is Ethereum, and I'm very concerned about Ethereum because this is very signal. This is like a much more bearish than the Bitcoin price, and this is not, I'm not talking about head and shoulders pattern here because that's too classy, but this is a bearish. This is complete removal of any bullish expectation from this cryptocurrency. Check the log. This is much more stable. Quit the log is bearish. I mean, this is like making a big zoom. And I'll remove the yes, it looks very dangerous. Ethereum now, very dangerous now. So to conclude this update, inflation is being controlled in the short term, not in the long term, and they won't be able to control it, this is my guess. And they say they are going to control it, but they can't. From a technical charts are saying that the way they are reacting, they will only be able to control it in the short term. And that means that from this year, if silver keeps above 24, it means that the market will ask for more proof that they will contain inflation. And the more they move interest rate expectations, the more pressure they will add on the bond market. So and more pressure on the bond market means more interest rates, and the interest rate going up means more interest on the bond market, and more interest rates on the bond market means more monetizing from the Federal Reserve, and it creates a vicious cycle. And that's the game that they will sit and wait. That's why we saw all the action, the retail, the real estate market. They're using very long-term loans to bet against inflation and win the game eventually. Real estate, those investment funds are waiting and not buying this crazy short-term game of volatility, interest rates, inflation, deflation game in the short term. They're betting a simple game. Tangible assets financed by long-term paper, fix is the name, fixed rate against US dollar. This is the most impressive game, and everybody will be and if things get out of control, they will remove the fixed rate, will be go shoot up like this in the 70s. All that people will lose their homes if they have not non-fixed interest rates. They will be destroyed. That happened in Argentina. So my main concerns are what will happen with the people with the non-fixed rate if inflation gets out of control and you get a Volcker movement by the Fed. This could be a possibility if things go really out of control. I'm not saying that inflation will be about 50% above these levels now. I don't believe so. But what happens is a black swan event, a new virus or whatever. You could get Volcker level strategies from the Fed, and that could mean people will lose their homes and others investment funds buying that. So gold lost its respect this year. All those are crying, oh comics this, comics that, sorry, this game is old. Ethereum is in danger. It's giving signals, more bearish signals, and that's it. I have more questions to study, analyzing that, and I'm going to study more about more signals. Basel III is not doing anything to stop the action in the gold market. What else? Interest rate hike announced by the Fed for next year. Maybe they are removed and keep pushing the promises in the future to protect the expectation from the market. But you have to see what they will do, not what they say, because this is the way the Fed has to manage the market. Alasdair MacLeod is the guy who was crying for explosion in the gold and silver market, and Chris Marcus, the famous Lord of the Apes, a good guy. They were saying, oh, blah 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 this, blah 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 that, unallocated and whatever. Nothing happened with the paper price as usual. And I believe if they remove the pressure from the physical market, nothing will happen with Basel III, because the amount of gold is the level of exposure from the banking sector is not real visible, because you don't know the amount of hedging, the amount of the disclosure for allocated and unallocated gold, and what is paper, what is physical. We don't have the map of that. And the net stability funding ratio provisions, gold derivatives, we don't know what will happen. I see the charts, and the charts are going down, and that's it. And they were saying that they were to torpedo the price of gold derivatives. I don't know what will happen, but I always bet against all these crazy ideas that they will shoot the same on the foot with regulations. So I don't bet on that. So I'm making this quick update because first this is one of the most important things. They were talking about shortage, and after we saw news about shortage this, shortage that, we saw China selling their stockpiles, Macron asking for selling gold, and we saw the Federal Reserve with reverse repo operations to the level of 700 billion US dollars. This is just the first shots. Sorry. Silver should test 24. This is only thing I'm going to say now. And if it protects the 24 level, there is hope. If Bitcoin protects the 30k level, there is hope for them. Otherwise, we are entering a cold season from commodities, but not the end of the game. I believe the game will be get out of control next year, and then the year after next year. They won't be able to control it, because if they push too much, they will crash the recovery, and they will create negative expectation that will attend the Biden presidency. So they are trapped. So the risk of crashing the economy is high because the amount of leverage. So they should allow inflation going in the system, but not getting out of control. This is the best scenario for them, allowing inflation but not out of control inflation. So inflation won't be crushed. They want inflation in the system, more inflation, and follow that inflation going up slowly. This is the best scenario for the central bankers. So I believe that they will allow inflation going in the system, but they will try, the best scenario will be that they allow inflation to enter slowly. It's a very risky game. So in the long term, get your fixed rates loans and bet against your paper money from disastrous governments that are broke. This is the best thing I did in Argentina. The best thing people is get cheap homes and not paying for them in the long term. So I hope you enjoy this update, because the best way to protect against inflation is with money that is not from your pocket and at a fixed rate. This is the main conclusion from this video. I hope you enjoyed. Thank you. Bye bye.